In this video, you'll learn how the professional traders use the doji candlestick pattern to multiply profits in indecisive market conditions. We'll look at the doji from every angle. There's a lot to take in, but I'll be sure to simplify it for you, and in the end I know it will benefit your trading drastically and give you another powerful lens for reading candlesticks. So let's begin. A doji pattern shows market indecision. Market indecision means equal power between the bulls and the bears. Basically, neither side have overall control because buying and selling pressure is equal. When there's indecision in the market, anything can happen. Because the force of the buyers is equal to the force of the sellers, if either side get an advantage over the other, then they could completely change the direction of the market rapidly. To use a football analogy, imagine the bulls are playing the bears and the score is 2-2. The game is currently undecided because both sides are equal. Then suddenly, the bulls score a goal, tilting the score in their favour. It's now 3-2 to the bulls and there are only 5 minutes left to play. Well, what's likely to happen? Well, obviously the bulls are now most likely to win, and the fact that it happened so close to the end and after a period of indecision means that explosive things can happen. And this is the power of doji patterns. They can cause explosive market moves, but to find these explosive moves, we first need to understand the inside and outs of the doji pattern. This is a doji pattern. The term doji basically means any candle which doesn't have a body because it opens and closes at the same price, as you can see. Dojis are easy to recognize on a real chart because they basically look like plus signs and crosses. Having no body means that to read the story behind the candle, we need to focus all our efforts on the upper and lower shadow of the doji. This is the default doji pattern. We'll call it number 1. Notice how the upper and lower shadows are basically the same length. This shows us that buying and selling pressure are equal and neither side has overall control. There are a few other variations of doji patterns that we'll cover. We'll talk about 3 more in particular. Number 2 is called the long-legged doji pattern. Some say this is the most significant doji for identifying reversal trades. It's basically the same as the default doji. The only difference is that the upper and lower shadows are longer, and of course, like every other doji, there's no body. Number 3 is the dragonfly doji. As you can see, it has no body and no upper shadow, only a lower shadow, which is a sign of bullish strength. Dragonfly dojis indicate potential trend reversal, because when they're found in a downtrend, they show that the lower prices were rejected and the bulls are able to regain some control and close the market level with the open. Finally, we have number 4, which is the gravestone doji. Essentially, this is a reverse dragonfly doji, as you can see. This doji has no body and no lower shadow, only an upper shadow which signals bearish strength. When you find a gravestone in an uptrend, it signals a potential trend reversal, because you can see the higher prices the bulls tried to reach have been rejected and the bears pushed the price back down to where it opened. I hope you now have a clear understanding of what causes a doji to form, but to drive the point home, let's use a storyboard to show you what a default doji looks like when it's forming. Okay, so first, like any candle, the doji starts at the open with a level line showing no movement. Second, we have a push upwards. The bulls show power and begin driving the market upwards by a small fraction until they are met with resistance. Third, this resistance materializes into power from the bears and they're able to regain control, pushing the market back down past the opening price until they're met with support. Finally, the bulls and bears begin scrapping at the low end of the doji. The bulls come out on top and move price back to its opening price where it closes. And this is the story behind a doji pattern. Bear in mind, it doesn't matter which side takes control first, all that matters is where the candle closes, which is level with its open. Okay, so now you're developing your skills as a doji connoisseur. You understand there are different types of dojis and you're aware that they indicate market indecision. I now want you to understand how professional traders use doji patterns to place reversal trades that are highly profitable. There's a few different ways to approach doji trading, and I want to build them up bit by bit so you better understand why they really work. First, I need to make you aware of a limitation of the doji pattern, because then we'll focus on how to get around it. Just because the doji means there is indecision in the market, it doesn't always mean the market will stop dead and reverse. Sometimes market indecision means a short break before a continuation of the previous trend. For example, see how we have a strong bullish trend leading up to the doji pattern? Well, two things can happen from this point. Number 1. The doji acts as a pause in the direction of the trend. We may have some consolidation or sideways movement before the bullish trend continues. This is just a pause in trend, not a reversal. Number 2. The doji may also act as an early reversal warning, and the trend could shortly reverse, giving us an early entry into a profitable reversal move. Now obviously we want to trade option number 2 because this provides us the greatest profitability. So how can we make sure we're on the winning side more times than not? Well, the answer is placement. What matters most is where the doji occurs. Just like every other candlestick pattern, we want to combine the doji with other reversal techniques to drastically improve our chances at success. The first of these techniques is called support and resistance. Support and resistance levels are areas in the market where price has historically reversed. When we spot dojis at these historical reversal levels, then this adds to the probability that we're onto a winning reversal trade and not just a pausing trend. Similar to support and resistance levels, doji spotted at Fibonacci retracement levels can also be fruitful. Fibonacci retracement levels are used in trending markets to find pullbacks in trend. These pullbacks are ideal points to enter a trend in hopes of a continuation, and we can use this to our advantage. Look for doji patterns that form at key Fibonacci retracement levels, as this is also a positive sign that the trend is likely to continue. The next technique we can use is slightly different. This is the momentum indicator technique. For those who use momentum indicators such as RSI or stochastics, you can combine the overbought or oversold readings from a momentum indicator with a doji pattern that's at an area of support or resistance. For example, when you find a doji candle at a resistance level, an overbought RSI reading can provide extra confirmation of a reversal trade. For a doji pattern at a support level, an oversold RSI reading can provide extra confirmation of a reversal. Now we've covered the placement element, let me show you how to improve the probability when you enter a doji reversal trade. There's another candlestick pattern called the morning star, and its counterpart the evening star. I feel that this pattern is the best example of what you need to consider in a good entry. So first we'll look at the morning star. This will teach you the best way to enter a buy reversal trade when we're in a downtrend and we're predicting the market will reverse and prices will rise. This entry technique is best used for doji patterns that are combined with support and resistance levels or any of the other techniques we've just discussed. Okay, so the morning star is made up of 3 candles. The first candle is a bearish candle. This candle just forms part of the current downtrend. There's nothing that special about this candle, it's just showing us that this trend is still going. The second candle is our doji candle, which shows us that there is indecision in the market. As soon as we see this doji, we know that there are 2 meanings. Either it's a sign that there might be a short pause in the downtrend, or it's a sign that a reversal might be occurring, and if this is the case, we want to get involved. The final candle in this pattern gives us a better clue that a reversal is actually occurring. This candle is a bullish candle and complements our prediction of a bullish reversal because it closes above the high of our doji. Because it's moving in the direction of our reversal, that makes this candle a high probability place to enter. Now an evening star is the opposite of a morning star and will teach you the best way to enter sell reversal trades when we're in an uptrend and we're predicting the market will reverse and prices will fall. This pattern begins with a bullish candle, which shows us that the bullish trend is still going. Then we see our doji candle, which shows us that there is indecision in the market. This is either a sign of a trend break or an early reversal signal, like we've covered. To confirm an early reversal signal, we look at the last candle. This candle is a bearish candle that closes below the low of our doji, showing us that a new bearish trend is likely to take over. This is a great technique for an early entry into a trend reversal. Let's just recap what we've covered so far. So in this video, you've learned that dojis indicate market indecision, dojis are formed by the equal power between bulls and bears, dojis can signal both trend breaks and early trend reversals, professional traders use dojis with support and resistance, Fibonacci retracements, and momentum indicators for the highest probability reversal trades, and the best way to enter an early trend reversal using a doji. I hope this video worked for you. Do me a big favor and like and subscribe to this channel, and visit www.trade.coach, check out our blog and subscribe to our mailing list to keep up to date with all the quality content we put out. Thanks for watching, and I'll see you next time.